Alright, hi, my name is Ashton Crowder. I'm from Charlotte, North Carolina. I'm a freshman second semester here at USF, and I am in the major of business analytics and information systems. So for the rest of this portion, I'm going to be off the webcam, and I'm just gonna. Alright, so basically, we're going to do a little overview of everything, and then we'll go into the requirements. Basically, this is looking at the insurance sales by state, and then some of them are by region, which are right here, right here, right here, and right here. So basically, we're just analyzing the state's insurance sales as well as like the regions, and just noticing for like patterns and stuff. Um, Now, so getting into the first requirement, which is requirement 2AB, the questions were which state had the highest sales and which state had the lowest sales. The state with the highest sales is New Jersey, and it had $1,145,344 roughly. And then the state with the lowest sales was Massachusetts with $102,239. Right now for the second requirement, which is requirement 2C, the question asks, what is the average amount of insurance sold per state? And I didn't really get an exact answer, but I just approximated based on the graph here. And as you can see, most of the data is, I would say the average is in this area right here. So it's going to be like roughly $695 based on the graph. Continuing off that, it asks which state had the highest average policy amount and which state had the lowest. So for the highest, we have New York at an average policy amount of $828, and then the lowest is Connecticut with an average policy amount of $630. For requirement D, the question asks how many insurance policies were sold in each state, which, I mean, it would take forever to kind of go individually by state and say, oh, it's this number, oh, it's this number. But overall, in total, there was 64,544 insurance policies sold in the entirety of the United States. The highest ones were Maine and South Dakota with 1,399 and 1,389 respectively, and the lowest was Louisiana and Texas with 1,230 and 1,248. So the second requirement, part E, asks, do any states not meet the 800,000 minimum sales level? And we can look at this on the AB, requirement AB graph. And as we can see, every state met that expectation. The only lowest one was Massachusetts, which was 802,000, which is still above. So every state made it. So the requirement 4 questions ask which region had the highest and which region had the lowest sales. And we can see that Northeast has by far the highest amount with $9,763,084, while New England has by far the lowest with $5,071,485 of sales. So the requirement 5 question asks who is the leading salesperson in each region. For the Northeast, that is Matt with 3,319,000 roughly. For the Southeast, that is Jennifer with roughly $2,780,000. For the Midwest, it's Dave with $2,771,000. For the West, it's Peter with $3,720,000. For the North Central, it's Mario with $3,689,000. And New England, it's Sarah they have $2,576,000. So for requirement 6, it basically asks what is the total dollar amount sold for each type of insurance. So that was basically adding each one of these columns and adding them all together. So for professional, which is this blue one, the total was $15,418,000 roughly. For auto insurance, which is this one, the total amount was $9,064,000 roughly. For home insurance, the total dollar amount was $8,688,000 roughly, with all these together. For disability, it was $6,557,000 roughly. And finally, for life, the total dollar amount was $3,496,000 roughly. So continuing off that, it said, what does the graph show? And I think what the first thing that kind of sticks out to me is that the sheer dominance that the professional category has over pretty much the rest of all the insurance types. As far as regions are concerned, you can definitely see that the Northeast, they are just higher overall than all the other regions. And so, yeah. So for the last requirement, basically, it told to analyze this map chart, basically. And basically what we can see is that New York and New Jersey are dominating because they're the darkest red. They have the most sales. While you can see Vermont and Massachusetts, which is, oof, can't really find it, but it's very, very light over here, which symbolizes how weak these countries are. On a bigger scale, you can notice that the East has a lot more red than the actual West or Midwest. You know, it's more populated, especially in the Northeast. That's pretty much it for that. So for the last requirement, I basically wanted you to analyze just the entirety of the project and look at like any trends or takeaways there was. And I have a couple. So for the first one, you can see for requirements 3, 4, 5, and 6 that the Northeast dominates as far as regions are concerned. In every graph, you can see just in sales, there's a lot of sales. This especially, this bar graph, shows the dominance of the Northeast. As far as states are concerned, requirements 2A, 2C, and 6 showcase the dominance of New Jersey and New York as the most dominant states for insurance policies. Like this graph definitely shows that. This graph shows that once more, and the actual heat graph definitely shows that. So that's another aspect. The other thing I noticed is that in requirement 4, although the West and North Central regions are typically one of the weaker regions out of all the regions, because like usually it's Northeast and Southeast that are dominating, their salespersons did a lot better than the Northeast salespersons, and this is primarily probably due that there is 3 salespersons for each the North and Southeast regions as well as the Midwest region, so that kind of like takes away like the share of their overall sales. So these guys get to focus more, but still, that's just something to note. Also to point out, probably the reason why the Northeast and Southeast are so dominant was probably because they have a larger population, is my idea, because they have a larger population than like say the Midwest. Um, you know, there's more likely someone to pay for insurance if there's more people there. So obviously there's going to be more sales where there's more population. So that's why I think it is. Finally, one last note, requirement 2D is definitely a really interesting graph because it doesn't have New Jersey or New York dominating. It has Maine and South Dakota dominating, which is 2 very random states to be dominating this category. This chart's basically counting the amount of sales that were sold. So while Maine and South Dakota did make the most sales, they didn't actually make the most money, as you can see here. They're a little bit down in like the mid-tier. So my idea for the reason behind that is because they probably have cheaper policies, I would say, especially in these states, because they're not as populated as say New York and New Jersey are. So most likely they sold their insurance rates at a lower rate, which is why they didn't make more money than say New York. And that's pretty much it. That's the entire project for me. Thank you, and goodbye.